India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Friday morning. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Nigel and Reema is with us today. Guys, good morning.
Hi, good morning. It's been a very, very tough week, right? Particularly yesterday, where the sell-off came from nowhere.
Well, indeed, and the global cues are still looking pretty much okay. But otherwise, I think for the Indian markets on the domestic front, we are searching for some good news because there's been so much of negativity in the last 36 hours or so. So some bit of positive news is something that the bulls will be looking to latch onto.
Absolutely. And, you're right. I mean, yesterday, the sell-off came out of nowhere. Yeah. There was no indication at all. And there's no indication this morning that, something is amiss. And I'm talking about largely, the global stuff that we look at. And of course, some of the other indicators. So it's all okay. But, markets sold off hard yesterday. The graphics will come up. And it's just a question I'm putting out there. I'm not saying it is so, but we are now getting very close to the 24,694 levels, which is essentially the low that we saw just a few days back, right? I mean, I think we'll have to, the 7th of October low is 24,694, and we're very, very close to it. But again, it's a question more than an answer at this stage. There are lots of the problem, and I was saying this yesterday as well, a lot of the high-frequency data is indicating that even in the festive season, things are looking, actually into the festive season, things are looking a little sluggish, subdued. We're getting lots of earnings as well, although it's not for this quarter, but it's for the last quarter. And it generally was expected to be people had written it off and they were looking at H2. But for single stocks, it matters. And more than not, most of the earnings which have come through are in the subdued, not so exciting category. And we'll go through each of these as we kind of go along. Now, just a bit in the global stuff. US equities were flat last night. So Nasdaq almost unchanged. US data points were strong. So core retail sales data beat. Initial jobless claims were lower. And as a result of which, yields jumped. Bond yields were up 8 basis points in the 10-year. We left off at about 4.09. We basically have reversed, nothing else. But it's back at close to 4.1. Dollar index, it continues to move higher slowly but steadily. About not quite at 104, but 103.78 is where we're at on the dollar index. And because, yields in the US are jumping higher, the dollar is strong, it's also having an impact on some of the other crosses. USD JPY, for example, right? I mean, the dollar is stronger and the Japanese yen is weaker. And as a result of which, you've got the cross breaking above the 150 level. I mean, it's not exactly bad news from a flows perspective. It's good news. But I thought I should put that up. But that's largely because of what's happening to dollar and yields. Now, in the US, just one other thing. This entire AI semiconductor theme remains pretty intact because TSMC really crushed expectations. And the numbers came out yesterday while we were still trading. But the ADR was higher. Stock, of course, yesterday was up. And it kind of lifted that entire space in the US as well. Oil prices flat, not very much, $74.5. There's news coming in this morning. We woke up to the news that, the IDF, the Israeli military, has killed the Hamas leader. The point is, will that lead to any a lowering of conflicts and hostilities? That remains to be seen. Now, let's come to the market here, right? The Nifty here. So we are now, as I said, very close to the October 7th low, which is 24,694, right? That's the level that we are watching out for. Hopefully, it will hold. Lots of near-term indicators are telling you that we are oversold and we are due for a bounce. Now, the point is, will we get that bounce? And the reason I'm a little more skeptical is because look at the 200-point fall yesterday. Absolutely unanticipated, but the market just kept falling, right? So will these indicators work? Maybe in the short term, we'll have to see. But one of them is important. The PCR, the Nifty open interest PCR, has now fallen to 0.65. It's the lowest since March of 2024. And actually, if you go back the last many years, at about 0.6, 0.65, it's kind of marked a short-term bottom many times in the past. And then, of course, the market does what it wants to do. The fact is, I mean, we've basically just steadily moved higher. Very short-term reversals, get to about 0.65, and then the market is bounced again. So we'll be wiser in hindsight if that is true, but I think we are there in terms of some of these indicators. If we are not able to hold on to the 24,694 level, the next number is the 20 weekly moving average, which is also very close by, which is about 24,650. So a cluster of supports here. Bank Nifty is facing selling pressure near the 40-day moving average, and we saw that once again yesterday. On the downside, watch for the daily low, which is 51,005, and then 50,892. That's a 61.8% retracement of the rise. And on the upside, we need a break above 52,000 roughly to confirm that a reversal perhaps is around the corner, reversal higher. GIFT Nifty will come up on your screen, and that will give you a sense of how we're likely to start 100 points lower once again. So, I mean, not looking like it's steadying anytime soon, but we are at those levels. If the market wanted to stage a short-term reversal, I mean, I think now would be the time. Rima.
Okay, and even IT today is probably not going to provide that support, right? Yeah. So yesterday, all the indices ended in the red, barring the IT index. The Nifty IT index was up more than 1%. And yesterday, we've got a clearer picture of the industry demand. Infosys, Wipro, LTI, and Mindtree, all three of them came out with numbers. So it's a good quarter for all three of them, no doubt. But it's on expected lines. There is no positive surprise to take these stocks higher from here on. So if you look at Infosys, for instance, the company, the guidance upgrade came on expected lines. Q2 on expected lines, it closed to about 3%. The ADR slipped 1%. Wipro Q2 was strong, but the Q3 guidance disappoints. So again, the recovery seen for Wipro is still a bit patchy because they can't follow up a good quarter with another good quarter in terms of guidance. That ADR was down 1%. LTI Mindtree's revenues were slightly softer than street expectations. Also, the market sentiment can be gauged, the retail sentiment can be gauged in terms of the Hyundai IPO subscription. So overall, it's sailed through. The mega IPO is sailed through with 2.4 times, but retail has given it a bit of a pass with the overall subscription coming in at just 0.5 times and QIB is being subscribed nearly 7 times. In terms of flows, the FI outflows continue. Nearly 7,500 sold yesterday. This month, their selling figure is approaching 75,000 crore rupees. The DIIs bought nearly 5,000 crore in cash. And for the month so far, it's about 68,000. But we're not done with earnings. So today, of course, we'll react to the likes of Axis Bank, Polycab, and so many others apart from IT. Today, it's Tata Consumer, ICICI Lombard, Hindustan Zinc, Jio Financial, MRPL, and Z. And tomorrow is a big banking day because you've got HDFC Bank, Kotak Mahindra Bank, and even Tech Mahindra will be reporting numbers. Their press conference is, I think, at 8:30 or 9 in the morning. So early start for them.
All right. Well, in terms of the global action, everything's looking positive from the US market perspective. But the problem from an emerging market like ours is that the dollar index was flirting with 100, 101 just a month or so ago. Now it's moved to around 104. And that's a problem point because it deters flows as well in all emerging markets and India in particular because of the kind of valuations that we are trading at. The other factor that we're looking at is the bulls. They are hoping for a stable session today. You want at least a stable session by the time we wound up because otherwise we'll be seeking lower levels. Otherwise, if we break the recent low, then maybe we're headed to test the 24,200 odd mark. Bajaj Auto's numbers raise some questions about the two-wheeler space and also the state of the economy. You also have other numbers coming from Polycab and the likes, which have made the markets a little bit jittery, and no surprises coming from the IT pack. So that's going to be, we are searching or we are seeking for some kind of good news. Hopefully something comes through during the course of the day. What about the FI positioning? Well, yesterday the unbound positions, both as well as the long as well as on the short side, but they continue to remain net short with close to around more than 60% of their positions on the short side as we speak. While the client positioning, well, it's absolutely the opposite, in terms of their positioning because they are net long with more than 2 lakh contracts on the long side. So that's how the short positioning is for both of them. Moving to the options data, then, well, you have the 24,800 call as well as put that are fairly active. For someone that's doing a short straddle, they're looking to pocket this 350 rupees odd and hoping that the Nifty stays in that range, 350 points higher than 24,800 and 350 points lower than that particular level. That could be a strategy at place. But I'm more concerned about lower levels. And the recent low, it becomes very, very important. You don't want this level to get breached. Otherwise, in fact, you could be heading to lower levels, which is at around 24,480, the 100 DMA. though we have resistance coming in at around 25,000, 25,100. This market will remain jittery till we get past the 25,000, 25,100 odd mark. And if we break these levels, then maybe we'll head it to around the 24,000 odd mark. The Nifty Bank, yesterday it had a weakish close, but that could provide a glimmer of hope. In case we are hoping for a bounce, this one needs to bounce. We ended below the 50, below the 100 EMA as well, and we've got big earnings that are coming up tomorrow. HDFC Bank as well as Kotak Mahindra Bank. And the positive to, if you want to view one of them from both these two perspectives is, these two are trading at similar valuations in comparison to, say, 2 years ago. So in that sense, valuations are still more palatable in comparison to other stocks. So I'll keep an eye out on both these two. There could be some pre-positioning getting into its numbers. That's where the Nifty Bank is going to be in focus. In terms of stocks that I'm looking at, well, RBI, they have wrapped Manappuram on the knuckles with regard to their subsidiary Ashirwad. So that's going to get a knockback. Remember, Ashirwad is more than 20% of its total AUM as well as of its net worth. And the fear is the promoter entity will have to infuse some capital over there to avoid any kind of erosion of the net worth. So that one's going to pull back to trade. Yes, valuation-wise, there is support, but this comes as a big, big negative for the stock. So we'll keep an eye out on Manappuram as well.
Okay, that's a stock to watch today, but let's get to the macro calls then. It's Chris Wood of Jefferies. In his greed and fear note, he says the base case is that the Federal Reserve easing cycle has begun and that in the much anticipated soft landing, the federal funds rate should be 3.5% by the middle of next year. That is also more or less the view of the money markets, which are now discounting a 120 basis point Fed easing by the end of June next year, even after Thursday's slightly disappointing CPI number in the sense that it came in above expectations.
Okay, there's another one. This is Lawrence Belanco on technicals. He's, of course, with CLSA, says downside momentum in Nifty stocks looks set to accelerate after recent break of its 50-day moving average and is on the cusp of breaking below early September and October lows at 24,694 to 24,700 area. He says such a move would confirm a short-term topping pattern and provide a downside target of 22,990. Essentially, a move back to the 200-day moving average. He says there add recommendations are Aisha, Coal India, Power Finance Corporation, while they have a sell recommendation due to downside risk in Maruti Suzuki.